Here is an interesting UAE VAT scenario that many small businesses may face. An entity normally has revenue of less than 187,500. However, in July 2026, it receives a one-time commission income of AED $350,000. This commission is considered a taxable supply. The entity may cross the mandatory VAT registration threshold of AED 375,000 based on its taxable supplies during the relevant 12-month period.
In my view, the first step is to determine whether the AED 350,000 commission is actually a taxable supply for UAE VAT purposes.
But there is another interesting question. From August 2026 onwards, the business expects its normal revenue to remain below 187,500.
If the business subsequently falls below AED 187,500 in taxable supplies over the relevant period, can it deregister from VAT? The answer is not simply yes. A one-time transaction does not automatically mean that the business can ignore it when determining VAT tier-ends taxables a tax be established. They should also consider the nature of the income. VAT deregistration has its own conditions. It should be considered based on the taxable supplies. Another question is whether the business can request an exception, because the commission was a one-time income, whether the income represents a taxable supply, the date of the supply, taxable supplies during the previous 12 supplies during the next 30 days. A single large transaction can VAT registration obligation, even when the business normally the VAT threshold. Thanks for watching. If you're unsure how UAE VAT applies to your commissions, PMI Consulting has you covered. Reach out to us today for your compliance needs.